Good evening, everybody. This is Michael Filiguera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, July 11th, 2021. Market on Friday did give a lot of support to the current detailed count that I'm using as we monitor and track the final fifth waves of a fairly large sequence. And where we stand right now, as on Friday, we did put in a nice rally, and that gave more credence to the fact that this sub-minute wave 4 did complete at Thursday's lows. And then we started to move up in wave 1 of 5. So it's sub-minute wave 5. So it's a sub-sub internals. And then, so we get 1, 2, 105, 205. And then the third wave starts to subdivide. 1, 2, 1, 2, 3, 4, 5 of 3. And then we'll get a 4, 5 of 3. And then we get one more, 4 and 5. So we have 3 series of fourth and fifth waves of varying degree. So we have one on the sub-minute level, sub-minute level, and then sub-minute level. Then we can start going up, because once we start finishing that sequence, that then finishes a minute wave 5. And so that would finish the minute wave 5, which in turn finishes the minor wave 5, which in turn finishes the intermediate wave 5, which in turn finishes the primary third wave. So that's what I'm tracking down to its tiny little level. And I'm building a zone on the way of where I think this could all end. And what I'm building that zone on are these series of fourths and fifths that need to take place to complete the entire picture. So let me tell you what I've added. I've added Fibonacci extension levels to tell me the points that the sub-minute wave 5 would be equal to in length on varying levels to the sub-minute wave 3. And those are the ones that are closest to the right-hand price axis. Then I go up, and I think I can get this one on the hourly. Yes, so this was sub-minute wave 5. Then I'm going to put the next one up for the minute wave 5. And those are like midpoint, okay, on the graph in terms of price, so that you can see these are the sub-minute wave 5. These are the minute wave 5. And I'm going to go out again to that daily. And I believe I got to go one more, because what I've also added is the minor fifth wave. And those are, yes, here again. Go on the daily. So these are for the minute fifth wave. These are for the sub-minute fifth wave. And these are for the whole minute. Then, for the minor fifth wave. Now, I want to start moving up. So I'm going to go back down to the hourly. Let's start to see where we get some decent overlap. And right off the bat, you can see where we're getting it. It's like we either are going to have a powerhouse and this whole thing is just going to go through the sky, because it starts to get very cluttered above 15,000. And the more you can build that cluster, the more times you get Fibonacci levels within that, raises the probability that that's where the market will take it. Right now, it's kind of still sitting really stronger on a little bit lower level where the 618 readings come in. And this would be where the minute wave 5 would be 618 times the length of the minute wave 3. And that fits cleaner. And then we get another 4 or 5 because we still have to move up and complete then the minor and the intermediate levels. And so that's why it keeps going out here. So this could carry out for a while. I don't want to say a while, but for several layers of points, let's say. So we're looking definitely, I believe, that within this current sub-minute wave 3, within sub-minute wave 5, that it could get close, 4,980, 50 to 80, possibly to 15,000 even, get right above it, pull back, come back, and then get itself above here. And it can do that all in a day and a half, basically. I mean, we saw the Dow rally 400 points on Friday. 450 points. They just came for it. NASDAQ, it zipped right through all that resistance, like, oh, resistance doesn't make any difference. What were you guys talking about? And it just jacked another $30 right on top of it. It's like, it was pretty wild to watch. It was like, okay, you want something that's a part of this index. And so we're just taking the whole thing higher. The NASDAQ begrudgingly almost followed through, but it did put in a decent rally. But then at the end of the day, when the other two, the Dow and the S&P were like going through the roof, the NASDAQ just kind of sat and went, well, we'll look, we'll go up a little bit. Well, we're just going to check you guys out. So I don't know if they'll play catch up or what, but we should expect some more additional upside for tomorrow. I believe that we're going to get into these levels. You now have seen how I have layered it up. You don't want to layer it up so much that it's confusing you, because you have to understand which level is completing where. I'm just drawing them all so that we can together look at this. But I will take off many of them so that I can see each individual level complete. It's like, for example, I would go over here and just remove this drawing and actually remove this one too, because these are out too far. As far as us day trading, they're out too far. So now I've got ones where it's like, yeah, we got overlap right here. So and then again, just above. But I think it'll get to that 618, and that'll just be part of this third. And then it pulls back, and then it goes up again for 3, and then it pulls back, and then it goes for the final leap towards the glass ring. So for tomorrow, I think pullbacks should be shallow. Now, break points, yes. From this level, we still have to keep alive. I think, as I said, that this could be A, this could be a B, and now we're going to come down in a C. Or this would have to work out as 1, this would have to work out as 2, and then you get a 3. So it can go either way, but the probability scales and what's happening in the market tend to point to here, point to higher versus lower. But then again, we had that. So I'm not going to try to determine and say that that can't happen again, because it can. So just trade what's in front of you, trade with the moving averages. Make sure you pay attention to when they get into alignment. I don't care about the direction. I just care about them in alignment in the direction that you can see that they're pointing. They're pointing up, that market's going to go up, and it's going to go up for a while. Because if you got a 1, a 3, and a 5, or a 1, a 2, and a 5, telling you that, it's like, yeah, don't get in the way. It'll be very costly. If you're trading and hedging each level, different story. But if you're just trading the futures, don't get caught in it. Again, I'm going to leave it there, folks. I'm getting a little lengthy here, and the next update will be Monday, July 12th.